Hello, everybody. In part B of this topic related to financial matters, we're going to look at two particular areas. One is in relation to this question of startup finance and what you need it for. We're going to look at new sources of funding and we're going to look at costings. Some of this is taking up some of the themes that we started in part one or part A. So, what does your startup need money for? So, for people who already have a startup, or a community enterprise up and going, you'll have been very conscious of all of this. For people who are only thinking about getting your community enterprise up and going, it's important to give consideration to these two areas. One is what's called considered to be what we call investigatory costs, and the other is pre-launch costs. This comes from a company called Workspace in the UK, and it captures it pretty well. So when I have had my idea for my community enterprise, it's necessary to think about like all of the background to it. So for example, if I'm thinking about setting up a coffee shop, I'm going to need to do some market research, figure out who else is in the market that I'm thinking about opening in. Are there any other coffee shops in the area? How will people get to my coffee shop? Are there staff there or labour available for me? Are there other people that can be employed to work in my coffee shop? And will I need a consultant to really look at this? In a lot of cases, your community enterprise, a lot of this kind of investigatory costs can be done by volunteers. But sometimes, unless the volunteers have, say, direct experience, particularly of, say, for example, the coffee shop, it may well be useful to get some advice from a consultant or a specialist in the area because they will see the pitfalls that you don't see. Also, things like if am setting up my coffee shop, where am I going to buy my product from? Who's going to be able to supply it to me? What are the terms and conditions of that supplying? Or if I'm selling some of my products apart from the shop itself, will I be selling it in other kinds of places? So all of this takes time and it takes effort, and gathering data is really important. And as I said, a lot of times volunteers will do some of this, but you may need a specialist. The second area then that you need startup money for is what they call pre-launch costs. Again, it can be as complicated or as simple, but at the very simplest level, it's when I have my coffee shop, if that's my idea up and going, I have to think about marketing, I have to think about promotion, I have to think about advertising, I have to think about any staff training I might need, for example, because from a health and safety point of view, staff would need certification, and all of those will be costs. I need to pay rent perhaps up front. So any business that starts up needs at least to give consideration to the level of funding that they're going to need at this point. And we've mentioned fixed costs earlier. Like fixed costs are related to, they're basically the bills that have to get paid once your business is up and going, regardless of whether you have any money coming in or not. Examples might be the rent costs for your premises. If you've taken on any staff, you have to pay them. If you've rented telephones or laptops or tables or any of this kind of thing, you have to pay for it regardless of whether you sell anything. If you've taken on an accountant, you have to pay for his or her costs. You have to pay for the stock at the minimum. If you're setting up your coffee shop, you have to pay for the product that you've bought into the system. So these are all kind of minimum costs that your startup must cover. One of the important ones to mention too is that insurance in particular. So I've made this slide with identifying three particular ones that relate to an Irish context, and in your own country the rules about what insurance you need to have may be different. But essentially, if you don't have insurance, you need to have insurance for a number of different areas. One is employer's liability. In Ireland, that's a business insurance cover for anybody who has staff at all. Then we have what are called professional indemnity insurance. For example, if somebody, if for example that the advice you gave, or if it's a service company, if the provision of service wasn't up to scratch, you can be taken to court and you need professional indemnity insurance. You also need public and product liability insurance. For example, if somebody is caused, becomes ill, for example, from something that was produced in my coffee shop, then I would need product liability insurance for it. And lastly, you might need building and contents insurance for the building itself. And again, if it's a coffee shop, for example, and I've rented the building, I'm going to need building and contents insurance, or there may be arrangements with the owner of it in terms of who's covering it. But insurance in an Irish context is particularly significant. So when we're thinking about like our product, whether it's a service or it's something we're actually producing, like candles have been mentioned before, or any other product, we have to think about, as I've mentioned earlier, the actual cost. And one of the words of warning with startups is if when you're starting out, you think I can get this cheaper someplace else, or I can buy it in a sale, or I can buy it, get a deal in some way. And in the context of this concept of a circular economy, of course we should try and do that. But it is important though to really recognize what the actual costs are going to be. So while you might get a deal on something the first time around, if you have to go back and buy it again, what price will it be then? So it's important to use the prices and the costs that are actually real at any stage. So be careful that you're putting in the actual figures as much as you can. So we've talked about the unit costing, and this is just the reiteration of that again. What you need to do, whether it's a service, in which case you're thinking about what per hour you need to charge, or it's coffee shop, in which case you have to figure out how much you're going to charge for the coffee or the cake, or you're producing something like candles. You need to figure out what the costs are. So when we've talked about this in the last session, we, for example, figure out that a coffee, in terms of its cost to us, may cost €1. And then the question is, how much do I charge the customer? What will be my markup? Do I need a 30% markup or a 50% markup? And we know that, for example, coffee in an Irish context has significant markup and provides a great deal of profit potentially for the business itself. So just keep in mind what your real costs are, and then what additional costs you're going to need to cover your overheads and to make sure that you get a profit or a surplus at the end of the year. An example might be, for example, here, if I can produce 100,000 candles, for example, then your cost of running the enterprise is 50,000, and it means that you need to sell each unit at least 50 cents to break even. So it's the real costs of running the business that are important, and your calculation of how much you're actually going to sell in any one year. So you may have an optimistic figure, a realistic figure, and a pessimistic figure to help you make your decision about your final costs. So in your ideal world, you might want to sell 100,000 units, but in practice, and maybe with a word of caution, you might think, I'll only sell 75,000. And if that's the case, you have to charge more than 51 cents per unit in order to cover your costs. So when you are a service, so you're providing a service, transport, or your gardening service or something like that, just think about what those costs are going to be. So things like staff will still be the same. The equipment that you're going to need to deliver the service, where are you going to store it or mind it? Are you going to have any particular location to work from? Repairs, insurance, these will be at least some of the costs that need to be taken on board, even if it's not even, but if it's a service that we're doing. In other words, say we might be providing gardening service to other people in the community. So a challenge would be if you take this spreadsheet or this little figure here to look at like what are your costs, your fixed costs, your variable costs, and your cost for any fixed assets that you might purchase, and do this sum for yourself in a very realistic way. And then the next step would be to consider then, based on all of your calculations, what your break-even point is going to be. So we've talked about fixed costs that are here. These are the costs that you have to pay for no matter what. And then you have what are called your variable costs, which relate to the product that you produce. For example, the more coffee I sell, the more coffee beans I'm going to need to use, or the more cake I sell, the more cake, flour and so on I'm going to have. So that is why the more units you sell, the more your variable costs are going to go up. And then this revenue line, this blue line here, is representing the income I think I'm going to have based on my costs. And what this is showing is that, like, if I need to sell 10,000 units to make what, in this one we're looking at dollars, $120,000, and that will be my break-even point here. Now, that break-even point is unique for every business, and for any business you need to be to the right hand side of this in order, well, you can be on break-even for a long time, but if you want to have any surplus for the long-term sustainability of the business, you need to be working to the right of it over here. So in this case, we need to be selling something in excess of 10,000 units of whatever it is we're producing in order to end up with the surplus, because break even means I'm just covering my costs. And remember that in the longer run, you're going to need some money for reinvestment, so you will need a little bit more than this. So that's why we need the money. So where, in addition to the sources that we mentioned in the last lecture or the last topic, we were looking at additional funding sources that are specifically related to social finance. And this comes from something I'm just going to tell you about in a little while, which is also a resource that's available to you. So this comes from the idea of social finance. And we've mentioned it, I think, in earlier on, but we're going to look at it specifically here. And it's a whole new, or perceived to be a relatively new area of funding, where people or investors are interested in investing in, for example, community enterprises because of the other return or the other impact that it provides, like here talking about like social and environmental returns for the investment that they've made. And that's become an important part in a certain area of financing or funding. So if you're interested in this, like one of our colleague projects has been the Social Bee project. This is where it's available. It's a Social Bee Erasmus project. And I put the link also on the Moodle page. But particularly, there are Learning Unit 5 is finding and supporting this area of funding social enterprises. And what does it talk about? So it talks about this idea of the social finance ecosystem being made up of kind of investors, people with money to invest, social enterprises themselves, like, and what they provide for investors that, for example, like the Bill and Melinda Gates Foundation, who are interested in the idea of the, if you like, the social and economic impact of the project that they're funding as much as anything else. So then we have what are called the social finance institutions themselves. So we'll be looking at those, and we've mentioned them earlier on. And then lastly is sometimes we have regulators or trade groups or other people who are in this relationship with, for example, the social investors, the social enterprises themselves, the investors and the institutions. So there is a kind of a concept of social finance funding that may be able to provide additional funding in your organisation. And in Ireland too, we have what are called work schemes that are generally provided through the department of the different government departments. And we have employment schemes, said that can be used by social enterprises, community enterprises. We have schemes or initiatives designed to get people who may be experiencing disadvantage back into work, and if a social enterprise or community enterprise employs them, they get some funding. So these are all kind of areas that can be other sources of funding for a community enterprise. And this one here is about competitions themselves. So competitions are basically where funders offer an amount of funding to the sector, and people can apply basically to compete against other people in this area to get the funding in it. So an example here in Ireland, we have kind of the People's Choice Award, and Coca-Cola have funded this to the extent of €100,000, and they give prizes of 5,000, 10,000 or 20,000 euros, for example. And this can be a source of funding, especially in the startup phase, because it provides some seed capital. But it's also important to say all the things we've said already in terms of being very clear what your idea is, very clear about what your purpose is, very clear about your structure and your organization will be key to it. And I've also provided this elsewhere, is the Social Enterprise Toolkit. It provides also other information, like in an Irish context, but I expect that in your country there are also similar, if you like, opportunities. And reiterating what we've said, no matter which source of funding we have, like this is taken from the Social Enterprise Toolkit, Chapter 7, and it's looking at the 5 C's. Like it says, like for the investor, they're looking at the character of the people who are supporting or advocating for the community enterprise. They're looking at whatever capital resources you might have, where you're going to work, the conditions of it, the capacity you've got, and any support or funding that you might have. But all of this is possible for community enterprises. It just needs quite a bit of thinking through. So that may be helpful in terms of getting your funding. So I'm just going to finish here with this. As I said, I put this link into it. This is a social enterprise toolkit. It is an Irish context, I appreciate, but it may provide some information as to similar types of projects that you can search for in your own country. So thank you very much, everybody. And in our final lecture in a few minutes, we're going to be looking at the accountancy issues in community enterprises.